We sit here on Friday with the Dow up 245 points, about a 2% move across the board for the major indexes. And it's on the back of a good jobs report. 163,000 jobs reported, gains reported for the month of July, which is much better than the average that we saw in Q2, which is about 75,000 jobs a month added. So the market liked that, and it was expecting about 100,000 jobs. So the market's up big. Overall for the week, we're still probably actually only flat or maybe up slightly after 4 down days the rest of the week. The first 2 days, kind of boring, light, waiting for the Fed and the ECB to announce what they were going to say Wednesday and Thursday. On Wednesday, the Fed came out kind of disappointed and slightly didn't indicate any new quantitative easing going forward, but continued its language that they were going to remain vigilant and keep everything loose as we muddle through this recovery, which is not a strong recovery. The ECB came out on Thursday, and after a lot of promises late last week, the market wanted some concrete evidence or concrete plan of how they are going to buy Italian bonds and Spanish bonds, and they didn't really give anything. Not much anyway, and the Germany continues to dissent and not want to fall through with what the ECB is saying. You get conflicting reports, but when it comes down to the real people that matter, the Bundesbank president, he was not really on board with going out there and buying these bonds. So the market was kind of disappointed in that. So the gains today really just is erasing all the losses from the rest of the week. So we remain kind of in a neutral stance, a neutral territory. We haven't broke out to new highs, but we're also not breaking down to new lows either. We're kind of staying in this range that we've been in for most of the year. So I think you should expect that going forward. Bulls, and there's a bull and bear side to things with the jobs report today. The bulls are going to say, great, we're not going to go into recession. Jobs are increasing, and but unemployment rate is not really going anywhere. That's something the bears would probably latch onto. And the bears would also say that the Fed is less likely now to institute QE3 because the economy needs a little bit less than they did probably yesterday. So there's two sides to every story. The truth is usually somewhere in between, but for investors, they should just stay vigilant, invest in stocks that are growing their earnings, and over time, they will do well.
The InvestTalk Update is a monthly briefing that gives you a snapshot of the past month's market, along with other useful perspective and information. You'll see important articles like Protecting Your Investments Against Scam Artists, excerpts from Steve's book, links to the month's InvestTalk talking points, plus news of upcoming InvestTalk events in your area. And it comes free each month to your email box. To get your subscription, just go to investtalk.com and click on the icon at the top of the page.